Hey everyone, it's Matt Williams from JTM Williams Capital Management. This is your mid-month update for April 2026. As a reminder, the ETFs, indexes, and securities mentioned in this video for illustrative purposes only and do not constitute a recommendation to buy or sell any security. Please refer to the disclosures at the beginning and ending of this video. Let's get started. I just wanted to do a quick update after the March 2026 update here from about 2 weeks ago because a lot's happened. What I outlined then was what I felt was most likely several most likely paths that the S&P 500 could take. What I want to show is just some things I'm looking at right now that lead me to believe that, at least so far, it's the potential for the more favorable outcome and less for the one that I outlined in terms of, let's say, some choppiness here. But let me share my screen. We'll get into this. It'll be brief. Right here is just the S&P 500. When we had this discussion last, I think we gave the update here around this level. And what I was looking at was the analog here from, let's say, last year, or other periods where we've had some downtrending markets. So, as we know, we started off here. We ended up having the war that's going on in Iran. The market had a precipitous decline in a pretty major way here in March. What I was looking at is kind of an analog to what happened here last year, where we had the initial down move off the previous all-time high. We ended up bouncing back. We ended up meeting up with, former broken support, which became resistance, downtrending moving averages, and also, at this point, the anchored VWAP or volume weighted average price from the previous all-time high, and they all ended up coinciding here and led to a second leg lower. Now, what I was outlining in the last one was I said I thought there were two likely outcomes. That type of analog where we might not have this precipitous of a decline, but because it's a midterm year, and typically the midterm years in the second and third quarter are pretty messy, and then ultimately from seasonality will end up bottoming sometime in the fall around the midterms and end up having a pretty nice rally thereafter. What I was looking at was this, one option being, okay, we had this breakdown, you end up having a snapback rally, we end up getting back up to broken support, reconnect with some downward trending moving averages, and then ended up ultimately having a slightly lower low or some chop from there on. Second option that I outlined was the failed breakdown, which was the S&P here broke the 6,500 level. The commodity trading advisors, managed money, hedge funds piled in and got majorly short, and you could end up having a pretty major snapback that's precipitated off of short covering, and it just rips everyone's faces off in the opposite direction. At least so far, that's what it's looking like. Now, I'm going to give two brief examples of at least what I'll say is comparing and contrasting this with, let's say, May of last year with March of last year. Okay, so as we can see here, let's say if we're comparing this to March, now clearly, we have broken above moving averages. We're reconnecting almost with new highs. And, from that standpoint, this does not look like March of last year where we failed at resistance, failed at moving averages, everything was still pointed lower and ultimately made a lower low. If I show this next chart, what I just wanted to show is this, let me go back, excuse me. This looks more to me like this power gap that happened when we had a weekend negotiation between the US and China last year, where, again, you had everyone still very short, at this period of time here in May. You ended up having a lot more favorable of an outcome over that weekend, and it caused this massive gap up. Now, what that is that's just buyers scrambling to buy. Those are short sellers that are scrambling to cover. And effectively, it caused this power gap, caused this mechanical buying that led to CTA short covering and other types of managed money, and led to this just kind of mechanical melt up that happened most of the spring and summer. Now, let me show what I'm talking about. So here's a chart that I'm going to show. This is the CTA positioning in U.S. equities here going back 10 years. And as you can see, almost every single time that the commodity trading advisors, now again, just so you know what these are purely technically driven funds that they're making their buying and selling decisions just off of momentum, levels, trends. They are supposedly completely dispassionate on what's going on outside of price. And what this is looking like is if you were to probably overlay this with the S&P, or let's say like some type of relative strength indicator with the S&P, what it's looking like is almost every single time the managed money CTA community gets max short or overly net short, the market becomes prone to very violent snapback short covering rallies. So very similar to what happened in 2025, as you can see here, the CTA community got just as short, if not more short, than they were at the Liberation Day lows last year. And then going back, you had the, sell off there at the end of 23, the bear market of 22, the COVID crash low, the low from Christmas Eve around 2018, the double bear market of 2015/2016. So what this looks like is almost every time that the CTAs start getting short, you really need to be on the lookout for a violent snapback rally. And again, this right here is fuel to the fire on a mechanical rally in the S&P. Now, when does this stop? No one knows. Could this top out here and roll back over? And this ends up looking more like late April of 2022 or the summer of 2022. And everyone's thinking, oh, the coast is clear, we've retraced enough, and then we end up ultimately going back and making a new low. Yes, everything, it should be any outcome is possible. What we have to do is always you take this one day and 1 week at a time. But just here, what I wanted to outline is something that I was mentioning 2 weeks ago when I did the last video with the two most likely outcomes. One being a messy chop where we come back up and fail at resistance and either make a new low or go sideways for quite a period of time. Or, as I mentioned, the CTA is getting overly short, having a less bad news or more favorable news, and the market having a failed breakdown. And as I mentioned here, just getting back above this level and just going up and ripping everybody's faces off who are short. So we'll see. The second one I just wanted to show real quick, which is, again, what makes this look a little bit different, or excuse me, what makes this look more like May of last year, which again, this power gap and some consolidation and go, rather than, let's say, March of last year, which is snapback, fail, head lower, is I want to show this right here. We're going to look at how I track credit spreads. Okay, so these are U.S. high yield bonds relative to equal maturity treasuries. Okay, so if the market's going from bottom left to top right, that means junk bonds or high yield bonds are doing better than treasuries. This is a sign of risk appetite. If they're going down, this is risk off behavior. These are credit spreads starting to blow out. It's a sign of fear in the market. And as you can see, this chart looks fairly similar, to the S&P. Now, again, where does this look different than, let's say, March of last year? So in March, when you had the initial down move, same thing, you had a snapback, momentum was negative, momentum even in this bounce here kept weakening. It never necessarily improved, and you had the second low, okay? And then in here, in May, when you had this power gap, momentum got positive, moving averages started turning up, and what I would say here is this looks, at least as of right now, more similar to May of last year than March of last year, where momentum's positive, momentum's strengthening, moving averages are turned up, credit spreads have improved, everything, at least right here, has recovered for the most part. So that's just something I wanted to leave you with, as far as just doing a mid-month update. We'll see what happens here the next 2 weeks, the rest of April. But I hope all of you have a good rest of your week. Tomorrow's tax day. Please make sure you file your taxes and pay your taxes. If anybody has any questions, please reach out to me, matt@jtmwilliams.com. I'd be happy to help out any way I can. I hope everyone has a great rest of your week and a great rest of April.